Oh. Welcome back, everyone, to another episode of Ready, Aim, Retire, the show where we go through everything retirement-centric, whether that's tax planning, whether that's income planning, whether that's legacy planning. We cover it all on this show. With me, as usual, is Tony Shore from the great state of Minnesota. Tony, how are we doing today?
I am so good. If I was any better, my name would be Rob Kirvan. I've said it before. I'll say it again. That's how good I'm doing today. But I've had a great week, Rob. How are you doing?
I'm doing great. And that's a sweet spot. So I'm doing fantastic. We're talking today, Tony, about tariffs. So over the last, we had a lot of announcements over the past few weeks, but a big one, on Monday with the tariffs. We're getting like some emails, some phone calls, some things like that. So we're going to talk about that, but I have to address something to the audience. We have lots of listeners out there. We appreciate each and every one of you. Yeah. We did a Social Security show, Tony, a few weeks back, and we got 7,000, 8,000 views. Got a lot of views.
Wow. It's really good.
And I don't normally do this, but I thought, you know what, I'm going to pop into the comment section, see what everyone's talking about. And and there was some stuff going back and forth, whatever there was. But the one that caught my eye, Tony, was somebody said, listen, if you want to avoid all the yammering, skip to 5 minutes and 48 seconds. And you'll avoid all this. We don't care who Tony is. We don't care who Rob. We don't care what Tony had at the state fair. Like, we don't. None of that. We're not even human anymore. We're just like AI robots.
But you know what? That's the best part of the show. So people, if you're listening, you can do that and skip ahead to where we really jump into today's topic. But it's our witty banner. I mean, why wouldn't you? I mean, come on.
The information brings them on, Tony. The banner brings them back. That's what I've always
said. The banter brings them back.
Right.
We need to have T-shirts made that say that.
You know what? I might get one for a few weeks just to put that back out there. I've never had anybody do that before. Even when we had the radio show for years, like I've never had someone like specifically hit the time. You see those like on the like YouTube and stuff, like skip to this part, and like you know, someone's sending like a funny clip or something.
Yeah.
But yeah, they skipped past our funny, Tony. They just went right. They just went right for the
Social Security facts.
Yeah, that's
which is great. That's what the show is about. But I mean, you want to hear what's happening in the Chicagoland area? What have we been up to? What's going on? The fun stuff. We try to bring some of that into it, make it conversational, make it entertaining. And then jump into the facts. But
we are human, Tony, at the end of the day.
Yeah. Well, some people are like, what was the name of that show? Just the Facts, ma'am.
Right. Maybe maybe we'll have to move that direction, but it probably doesn't suit my personality too well. But
no.
Anyways, what we're going to do, Tony, this is a great show. So this is a fantastic show. We're going to talk all about tariffs. And what I decided was, let's bring on somebody that really knows. So what I did was I reached out to a lot of people, and I ended up getting my number one pick. I got Keith Gangl from Grading Investments. First of all, welcome, Keith. I see you over there.
Yeah. Whoa. Ladies and gentlemen, Keith Gangl, Grading Investments.
Thanks for the invite and nice words.
Wow, I never got any of that. And Keith, so you've been a senior portfolio manager, and you've been in this industry, would you say, like 30 years?
30 years. That's why I said I used to have a lot of hair. I used to have a hairline like you, Rob. And
you must have started when you were 10. You don't look a day like 40.
Losing a little bit on top, that tan, I'm guessing you spend a lot of time in the South or on trips, it looks like to me. So
everybody needs a little break once in a while.
Over there. And I'm like, I don't know if these lights are making me look like a ghost, but I certainly look ghosty today looking next to Keith. But
it's a lighting.
Yeah, it's a lighting. Yeah, so I might have to do this in the dark next time. But my Irish skin just like glows. But all right, so Keith, I'm going to give you what I've been hearing from clients, and then let's just and then you can comment of what it is. So obviously, what happened, folks, is on over the weekend, really, on Saturday they announced we're going to put some tariffs into Canada, tariffs into Mexico, tariffs into China. And that was on the heels of something that happened the weekend before. So it's been a little bouncy out there. And what I said to clients was, they're calling, oh my gosh, what's going to happen? Is inflation going way up? Is the market going to crash? Like all these concerns that are valid concerns, right? Like when you hear like all this tariff talk, pretty valid. I will This is
Wait, you cut out. Wait, you just cut out. We can't hear you. Nope. You just cut out.
About 30 seconds ago.
I don't know why you cut out. Did you bump something? Are the cords plugged firmly in? Did something get bumped? Oh, he's gone. Shoot, we're having all sorts of problems.
Oh, and he's on a roll too.
I'll wait to see when he comes back in. They can edit it.
Yeah, yeah.
Because that was good.
No, it's
I'll
good.
put him back in.
Just say what he's getting. Client questions.
Oh, where'd you lose me? Like my internet dropped. I got a notification. The internet cut out.
That's
yeah, that'll do it. That'll do it. Okay, so
you said you had questions from clients. You're starting to get in. You kind of prefaced all that.
Start with I got some questions from. I get questions from clients.
Okay, so Tony, we like over the last few weeks, there's been a lot of things happening. Obviously, we got new administration. They're making a move. This, folks, this is not a political show. If you listen to me, I'm not really, I don't get political whatsoever. But we're getting these calls, right? So all of a sudden, the tariffs, they announced them on Saturday, put them into force kind of on Monday. So the market was not happy with that. It was kind of a surprise in a sense. And that causes angst. And the reason, the questions I was getting, Keith, and what we're going to address today is things like, is the market going to crash, because of these tariffs? Is inflation going through the roof? Is it going to rear its head back? And we're not through it yet, but we're definitely in a better spot than we were a few years ago. There's no doubt about that. And these concerns are valid concerns, right? Especially for investors, especially for, everyone buying groceries or everybody, doing things. And I'll give my 2 cents, but I want to lean on you a little bit to kind of go through it. And I will tell you that, again, like I said, it's not political. I keep saying that because I know people, are really into that stuff, and I'm not really. But 4 years, or I guess 8 years ago, when the current administration was in, they enacted tariffs, and the tariffs went through. We're in. We didn't see the inflation. Actually, the economy is quite strong. And then the next administration came in, and guess what? They kept them. They kept all the tariffs, so they were definitely working. And the point, folks, of tariffs generally, and Keith's going to talk more on this, it's one to eliminate the trade balance, obviously, but to get more companies in the USA making products in the USA, things that we can actually do at home rather than bringing them in. We saw during COVID a lot of issues with supply chains because everything was made not here, and even companies that had too much exposure in China, their factories are shut down. They couldn't bring any products in, So those things, definitely are things that, top of mind, but they kept all those things kept in, and we want manufacturers in here. I'll tell you a quick story before I bring Keith on, because I can't stop talking, but Toyota, if you remember Toyota, Toyota's a truck company or
still around.
So years ago, Toyota, they came in with a tariff saying, you know what, if you don't make a pickup truck here in the USA, we're going to tariff every pickup truck that comes into the USA. This is probably, 30 years ago or 40 years ago, whenever that was. By doing that, do you know how many of Toyota pickup trucks are made in the USA? Their percentage? 100.
Yeah. 100%. Wow. I would guess 50 or 80. That's
yeah. Every Toyota truck you see, like trucks, pickup trucks, not their crossovers and stuff like that. There's some of that up in Canada or whatever, right? But still, the point of that was get people working here, get factories here, and it helps our economy and it helps our people. They get good paying jobs. They get to do things. So, without further ado, Mr. Keith Gangl, can you give us what you got? Give us an overview. First of all, why don't you start with, an overview of these tariffs? And anytime you want that chart you sent me up, you tell me, and Tony will put that thing up. So
we'll hold on to the chart for a second. Okay. But you did a great job of kind of laying out the groundwork for tariffs and the historical. I think what's very important that people understand, they hear tariffs. Tariffs have been around, like you said, then a long time, even before Trump 1.0. And like you laid it out perfectly. Example, people are fearful with the tariffs in this first administration. What ended up happening? Next administration, Biden, Democrats, they kept them in place. So they're, he's America first, bring home jobs. That's the goal of these tariffs. And now he's, second bite at the apple here, and he's doing it again. So that's what he's doing. And then announcements that we had over the weekend were 25% against Japan, China, Canada, 25% against Mexico, and then 10% on the China tariffs that are already in place. So
like an extra tariff on top.
Extra tariff. And this one's a little bit different. This was, at least on the Canada, Mexico was due to fentanyl. I think he wanted to tighten up the borders and the drugs, which that kind of surprised the investment community a little bit. Is like, okay, I can see the economic stuff like Toyota Motors, bring jobs back. That was a little bit different angle. So from an investment standpoint, this is a little bit different. But what ended up happening, again, last hour of the negotiations.
Sure.
Mexico capitulates, says, okay, I don't know exactly what you want, but we'll put 10,000 more troops on the border. Canada playing a little more hardball because they don't know exactly what Trump wants. And again, even as investors and all the stuff I read on it, we're not exactly sure. We want less drugs in the U.S., which is great. Everybody wants less drugs in the U.S. How do we get that? Canada basically said, okay, we'll throw a few more helicopters, a few more people on the border, and now we're kicking the can down the curve for another 30 days. So we're not till March 1st, we'll get the 25% tariffs on Canada and Mexico. So again, the reason he does these, he's the king of making a deal, right? Art of a deal. So he wants something. He wants less drugs in the U.S., along with that is immigration policy. That's kind of tied into that as well. So this is his first foray. Unfortunately, from us as an investment person and you telling your clients, it has nothing to do really with a whole lot of current economics, like, is it Toyota Motors, is it cars, is it, different things like that. Now, if tariffs actually were in place, again, they're not, that 25% got kicked under the curb. In just my opinion, again, nobody knows inside Trump's mind what's going to be happening. I think those keep on getting kicked down to the curb because, he got a little bit of, border support on, guarding the borders, but he's not getting any economic, advantage as well. So we'll see what happens there.
Okay. Right. So, and that's kind of what he does, right? He's somebody that shoots first and asks questions later. He likes to throw a big splash, and everything he does, it's put a big splash, and he's that's his method to negotiating. Is it right, wrong, or otherwise? We don't know, but that's kind of the way he does it, right? So he does this splash, everybody panics. I'm originally from Canada, so I still have friends and family up there blowing my phone up, like,
I bet.
What are you guys doing? Like, what are you guys doing? Like, I got anything to do with anything. But
let me get Trump on the phone for you.
Right.
Like, Rob, what are you doing down there? You're supposed to be representing. What are you doing for your home country of Canada?
Right. And obviously for them, they get, they're lumber manufacturers and things like that. Like that's a shock. And it's so they're like, oh my gosh, what are they doing? Are they trying to annex us? The 51st state comes up, all of that kind of stuff. So for me, it's we got to look at kind of what they're looking for, but it's that method of negotiation. Kind of these are our allies.
Friends,
they're our friends. Like it's supposed to be okay. Maybe do something like this behind closed doors, but when you throw it all out there, it gets people defensive. In anything you do. If I come at anybody aggressively, your first stance is going to be like you're going to put your chest out and be like no, and maybe it works for him. I don't know.
Yeah, the other thing confusing was again, this is all on fentanyl and kind of coming to the borders. It's like, if you look at the numbers, the poundage of coming last year from Canada was 43 pounds, which is 0.2% of the fentanyl coming to the U.S., whereas Mexico, it was 97%. So I'm like,
right. Point two versus
97%. So that's why this again, I'm generally agree with his negotiating tactics of, let's get something on a deal. Let's bring America first. Let's bring some jobs here. Let's get some economic benefit. But to say you're going to do 25% tariffs on all these different products from Canada, we'll get into exactly what that means,
right.
The different products, and 25% of Mexico, to me, that seems a little bit skewed when 97% of the problem
is coming from Mexico.
Yeah, the southern border has been a problem. Everybody knows that. That's one of the ways he got elected, is because of the problems at the southern border. And he's made no qualms about he has problems with Mexico in general. He constantly makes comments in his first term The Canadian thing, the Canada thing, I think really shocked a lot of people. Like, wait, our northern border, Canada?
Our friends up north?
I mean, Canada, going from Minnesota to Canada or Illinois to Canada is, it's like, it's easier than going into Wisconsin. I view them as a closer ally than Wisconsin at this point.
Oh my goodness.
So, Canada is like, I'd rather go to Canada than Wisconsin, but no, I'm teasing the Wisconsinites out there. I'm from Minnesota. I have to do that. But but seriously, that was a shock, I think.
Right. Like and that it's such a small amount, so it's not really, you
less than 50 pounds,
right?
Yeah.
Are they sneaking a lot of maple syrup in? Possibly. We haven't got the numbers on that
much
yet.
To Quebec's dismay.
Right. Slide in the maple syrup, maybe some hot stick, I don't know.
The maple syrup mafia up there in Canada, they control everything.
There's a huge ring up there, so you got to be careful with that. Okay, so Keith, why don't you want to put up that chart?
Yeah, put up the chart.
Walk everybody through. And this chart, folks, when you see it, if you're listening on your podcast, you can definitely call in and get a sample of this, because this really tells a good story. So Keith, why don't you walk us through that? Are we able to get that thing bigger, Tony, or?
Yeah, you and me, glasses.
That's
about
as
arms,
big as it's going to be.
Okay, I'll give you the stats. So obviously we export a lot of stuff here in the U.S. and we also import a lot of things, right? It's just the trade. And so generally speaking, we have a trade imbalance. That means we're importing a lot more than we're exporting. Just the bigger numbers before I get to this chart is we consume about 29% of all products in the world, but we export only 15%. So we're consuming a lot, exporting less. One of Trump's goals, just to understand this as we get into tariffs here, is to kind of more that trade balance you just talked about earlier, to get that 29 down, maybe get that 15 up a little bit. Now let's look at China, for example. They export 32% to the world, but they only consume 12, right? So that's a big trade imbalance. That's one, the things that just to keep in the back of our mind. Now let's talk about how important our trading partners are. China, Canada, Mexico, all important. We import about 1.25 trillion now, Tony. You got that number? That's a big number, right? That's a lot of products. And
I was told there would be no math. And that's way too big of a number for me.
Rob hit it, whether it's cars and maple syrup and different things like that. We import a lot. And the top 3 trading partners are those 3 countries. So they're very important. And we have Mexico is now our number 1 our country that we import from. We import almost 470 billion, so roughly about 17% of the overall, that 1.25 trillion I talked about earlier. So it's a big number. And then we have China is now at about 13.5% of the overall imports. Just to put that in another perspective on that, if you go back to 2017, we were importing 22% was from China. Now they're down to about 13.5%.
Oh, wow.
So that's an important figure, right? Because so that was what Trump did with those tariffs and Biden kept in place. China was a very, not so friendly to the U.S. like, Trump likes to say. And they were a big trading partner. It was a huge imbalance. So by adding those tariffs to China, we've now shrunk that 22%. They're now at 13.5%. So a lot less important.
Right.
And then we also had, Mexico used to be down at second and third, and they're now number 1 at 17. And we like to think at least Mexico and Canada, our near neighbors, are more friendly. And we have Canada moving its way up to almost 13%. They're at 377 billion of our imports.
Yeah, and 377 billion, Keith, sorry to interrupt. A lot of that's probably going to the maple syrup mafia. Up in Canada.
a little bit of that. So it's like they are very important trading partners. And I kind of see what he wants to do. Like I said, he wants to bring that overall 29%, of our trade imbalance, bring that down. And now he's making, obviously having Mexico and Canada be more important, I think is a very strategic thing. So by him putting a 25% potential tariff on these countries that are kind of becoming more friendly to us, it's kind of a little bit puzzling, right? So I see the China, and that's why I think that got delayed until, next month. But the China one we haven't touched on yet. That 10% actually did go in effect actually on Monday. So China did get hit, and they've been, hit for all along the way here. So they are getting impacted. So these are, those 3 add up. There's 42% of our, trade is with those countries. So they're very impactful. And now the reason everybody's kind of freaking out or potentially freaking out is tariffs are, like we mentioned at the beginning of the show, are taxes, right? So it's like whether it's your maple syrup, your vehicles, your avocados,
lumber,
your beer, your lumber. That's a big one for Canada. That's some of the people talk about, okay, well, let's talk about different countries and what's impactful. The US, soft lumber for what you build into a house, we get 70% of our imports from Canada.
Right.
So,
wow.
If we put it, just think about that. So if we put a 25% import tax on that, that's just going to make housing, which is already expensive here in the U.S., even more expensive.
Right.
And that's the other thing, say, okay, the other question we often get, and I'm sure your clients ask you as well, is, well, who pays tariffs, right? So obviously the company importing the lumber has to pay it. Mm-hmm. What they would like to do is pass it on to the consumer. That's why it's a tax. Now, some of the stuff they end up passing on, some, the customers push back or they find an alternative product, right? Well, lumber is a little bit difficult, right? So if you have a unique product that you're importing, more than likely if that 25% tariff is going to get passed on to the consumer, right? Probably not going to get lumber from somewhere else because Canada is so important for us. So that's, keep that in your mind as well.
It's not even the cost of the house to build a new house, Keith. It's like, people, that are in houses, especially right now with high interest rates, they're deciding, you know what? We're not going to move. We're going to fix up this house. So you fix up the house and you're redoing your basement or doing a deck or, whatever you're doing. That's going to add that's a significant, because lumber's already expensive.
Yeah, it's outrageous.
I remember going into Home Depot prior to 2020, and a 2x4. And in my mind, a 2x4 always costs $1.50. And
right,
yeah. Until like after everything started going crazy, and they were up like $4, $5 for a 2x4. I'm like no wonder housing's more expensive. Like and they may have came down now. I haven't had a project in a while, but
no, it's still up there.
Is it? Yeah. So so throw another 25% on
a sheet of plywood is outrageous. It like quadrupled in price during COVID. Plywood.
And those tariffs that, Trump did end up putting some of those tariffs on wood products from Canada. I think it's about 14.5% currently. It's been like that for years now. And so if you had that another 25 onto that already 14.5, I mean, that's a pressure point for consumers. That's just generally not good, right? Again, we like to believe that he's using these as, trading, negotiate some kind of benefit for the U.S. But one of the benefits he wants to do is bring U.S. jobs here. But how quickly can you bring, whether it's manufacturing, whether it's, it's lumber, some of these things you can't. Some like avocados, we get 90% from Mexico. We don't have necessarily the climate, to grow avocados, right? So it's like
or the space, California with the dense population.
Yep. No more guac, guys.
Yeah. Oh, I love my avocados.
I know, I love them too.
Like.
Well, so that's prepared to pay for a little bit more, I guess.
Right.
I mean, again,
they're not cheap anyway. I don't think
these tariffs aren't in place, and I think he's looking for negotiation. Now, the one thing I'll also say is, say this gets resolved in the next month, I'm not sure it will. I think this is going to be an ongoing thing for the next 4 years. I think it's going to be more front end loaded, though. There'll be a lot of we're throwing up tariffs. We want some concession out of you, and hopefully we get it. If we don't, who knows? 6 months from down the line, he could say, okay, I'm going to slap a tariff on a certain part of the company. I don't think it's just blanket 25% that really scares the overall investor base.
And like you're saying, that's not going to be the number in the end, right? No. So and that's kind of like we said in the beginning of the show, it's kind of how he negotiates. But you telling the story of China going from 22% to 13%, that's big.
That's big.
That's huge, and that's good for the U.S. because COVID proved we were way too reliant.
Oh, right. The companies that had so much of their factories and their material building in China that got caught because they couldn't do it, and now they've diversified into Mexico. They've diversified into India. They've kind of moved their stuff around a little bit, but they all got caught, right? So that was a big lesson, and I don't think you want any huge imbalance with 1, 2, 3 countries. You want it to be, because if they turn to not to like you anymore, guess what happens? Then we're paying the tariffs and doing things like that.
Yeah. So I mean, a lot of these are threats, and again, there are real costs. But if you just look at what's happened in the last 8 years, that China's a perfect example. I think that's a good thing for the U.S. consumers should feel good about. There's again, you pointed out in the beginning part is like the economy's been doing well with these tariffs in place. Now, I certainly don't want a 25% blanket one. I think there will be some target ones. Like I said, the China one actually went into effect. That's 10%. So, and they retaliate and they put 10, 15% on different like LNG and some oil imports. But just to put that in perspective, we export of the new tariffs on China is impacted about 20 billion of our exports. Now that 10% that we put on China impacts about 420 billion of their products coming into our country, on a run rate.
So you're on the right side of the balance, right?
You're right exactly. You're on the right side of the balance. So these are important issues, but they're moving targets as well. That's why it's hard for us. And, next question you might ask is, well, what do you do as
I was just going to ask that.
Go ahead.
If I'm an investor, so I hear this, I hear this noise, Keith. What do I do? Am I panic mode? Do I just take all my stuff and put it in cash and put it underneath my pillow, or do I grin and bear it, or do you look at it like, what do you do?
No, I mean, you do a great job with your clients. You keep them well diversified. That's an important thing. For us, am I changing my investment philosophy of companies I'm buying? Absolutely not. If I knew some companies would be directly impacted for a long period of time, I would potentially sell out of that and buy something less impactful. Generally speaking, the companies that have been hit recently on this news are the automobile industry. We don't really own any stocks in that space. I really don't like it, generally speaking. Anyway, it hasn't been a good space for a decade, and this certainly is not going to help it. It just makes certain parts of the investable universe, in my mind, almost uninvestable. Right. We're not in those, but your clients certainly shouldn't be panicking, because this, if I'm going back to Trump 1.0, tariffs were in place. The following administration kept those in place. And what did the markets do over those 8-year? Markets went up nicely. So you certainly don't want to panic and pull your money out. Now, we, as professional investors, want to make sure we're investing in the right areas. We want to invest in companies that are growing, growing their margins, and can they pass these tariffs on if they do get impacted by them? Right. That's what we're looking to do. But your clients should, there's no need to change your plans. The other thing that we talk about, at Great Investments, 2025 is kind of the year of bringing an umbrella is kind of our theme. Every once in a while we'll have a theme. Everybody likes themes.
Sure we do. Right.
Yeah. Right. The last 2 years have been
right.
The last 2 years have been fantastic in the stock market, up 25% roughly. When I was talking stock market for S&P 500, right? Most people aren't all in the stock market. They have bonds, stuff like that, right? So, your average investors may be up, 10% plus, when normally you're trying to plan for 5%. So it's been a really good tier run. This year, year of umbrella, we think the markets, a lot of good tailwinds in the markets. We get this tariff issue, could be a slight headwind, but there's a lot more positives going on. We just think people should be balanced relative to their overall allocation. If they're a 60-40 client, it refers to how much they should have in the stock market versus how much they should have in safer money. That's 60-40. Over the last 2 years, that number's probably gone to 70-30 if they haven't rebalanced. We're a big advocate of rebalancing to things like that. That's what you want to do. And, don't panic. Just take a deep breath. Make sure you're allocated to where you should be.
Right. And in this year, Keith, so here, when clients are coming in this year, we have an iPad right in the reception area. So we're having everybody actually do a new risk tolerance every time they come in, because people's risks change, And sometimes you see headlines like this. And if you're one of those ones really panicking, maybe you have too much risk in your portfolio. Maybe that's the problem, because like I'm with Keith, we will get bumps in the road for sure. If you look back, the first time that Trump and his people were in, there was definitely bumps, but by the end of it, everything, the market went up, right? But it'll be more of the roller coaster, kind of ride, I think, and versus just a slow and steady. But we'll get to where we need to get to at the end of it. These issues are, we're going to see more of these, I think, Keith. Like, it's not the last we've heard of new stuff coming out, I'm sure. So
no, there's all kinds of issues.
Lots of issues, lots of things they're working on. So, I think that would be that sound advice you gave, Keith, is just make sure your risk and your portfolio is matching your current risk. And folks, when you're coming in here, or even if we're doing Zooms, you're getting a thing beforehand saying, hey, update your risk. Because that's, because your life changes and maybe your views change, over time. So we want to make sure that we're lined up properly. So we block out this noise, right, Keith?
Yeah, we do. And then again, now if something changes and all of a sudden these tariffs do go in place next month, we'll change our portfolio slightly to take advantage of where we see some sell-offs. We may say, oh, some areas are really going to be impacted going forward, so we'll sell those stocks. We communicate to you, we communicate to all the different clients, we let them know our thoughts. But you're doing the exact right thing. You're rebalancing that ahead of time, and you hit the nail on the head. Is the commerce score? That's kind of a risk assessment. Yeah. When they come in, they do change, right? All the noise, especially in the politics. Okay, well, not only is this tariffs, and we had deep seek the week before. We got Doge, like it or don't like it. A lot of stuff's potentially, mixing things up. I think ultimately there's so many more positive tailwinds, but it's going to be bumpy. As an investment guy, I would love it to be a straight line this year. And say, okay,
me too.
8 to 12% year on the stock market. After the 2 big years the year before. We'll get 1% per year or per month. Fantastic. But it doesn't work that way. There'll be ups and downs. Oh, and by the way, what January end up? We're almost 3% in the S&P 500 for the month. All this noise has been going on. There's been several different, news headlines like to grab people and scare them a little bit. There's a lot of stuff going on. But investors, we're kind of taking a deep breath. We've seen this movie before. Fundamentals are in place for, good things to still happen going forward. And again, the markets are up 3%. That's even stronger than I would expect. And we're fairly positive on the market.
Right. And you're right. And, I would have thought the same thing. I would have thought coming into the inauguration, I thought there'd be some choppy waters but you're right. It ended up pretty good. And we're getting the noise and it's still kind of, chugging along, and that's kind of the MO. That's kind of the MO. And you're right. You saying we've seen that movie before you can be, and markets are like that, folks. Like there's always, I don't care who's in office. There's always some sort of speed bump. Every year there's something, there's something that comes up. There's something either geopolitical that happens. There's things that just happen. And it comes down to making sure that we're managing your wealth properly. We're doing what we should be doing. We're allocating you properly. So, people like Keith and his teams of people can make sure that what's inside of those allocations is working properly for you. So, I'd like to just say a quick thank you to Keith Gangl. Like, I know you're busy and I know you slid in here like literally almost last minute, but coming down here and explaining those tariffs, because those are big questions, and just kind of getting it simplified, I think is going to help a lot of people out.
Yeah, just take a deep breath, work with you. Like I said, I think this will pass. But there'll be some bumps in the roads. There'll be all of a sudden maybe you're in the avocado industry and you two love avocados, obviously.
I do.
Right? Man. That could be an issue. Maybe Chipotle is, going to have to charge you more. Maybe you're going to have to pay an extra 50 cents or something. I don't know.
Right.
We'll find out.
Yeah. It definitely will trickle down in some way, shape, or form for sure.
Oh, sure. Yep.
All right, guys, great show today. And Keith, again, what a huge get, Rob. You always manage to pull in the A-listers. Keith Gangl from Gradient Investments, portfolio manager, and a lot of talk on tariffs, tariff trouble out there. The message I hear is don't panic, work with a financial professional like Rob. Rob, how can our listeners get a hold of you to make sure they have the proper plan in place?
100%. And folks, you can also call if you want a copy of that chart that Keith put up. That's a pretty good chart. So give us a call at 630-780-1099, or you can go right on our site and book an appointment there at apadvisorsgroup.com. I know I'll be walking around with this chart this weekend and just to make some conversations with people. Have you talked about tariffs? Oh, wait,
put it on a t-shirt.
Yeah, something like that. It's a great conversation starter, or ender. I don't know, but it's but it's definitely having knowledge is power. I always believe that, and knowing the information. There's a lot of misinformation out there, folks, where you're paid to click. When nothing. If you're clicking on it because you're afraid, it's because that's kind of what they want. That's how they make money. So get the information. Keith gave us a great insight today, so I do appreciate that.
All right, and that does it for today's episode of Ready, Aim, Retire with our host, Rob Kirvan.